Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is August 14, 2018, and tonight I'm taking a look at sugar. The ETF is a very good one. It's CANE, C-A-N-E, and it obviously emulates that of sugar. And what I want to do is I want to kind of make a point here that from a short-term perspective, this is early because it's on the trading side. But on the investment side, is something you want to start looking at. So if you're going to be trading this, you might be looking at the long side from the ETF side rather than the future side. So let's just go through the particulars and sort of see what's taking place here. Obviously, the trend is to the downside. Anyone that's been trading sugar knows that. We're short the market and doing well with it. But with that trend, we now have some early warning signals, and I say this because I want you to start looking at sugar as a possible investment. So the technical rating for the market is flat. There's not indication of higher or lower, but it had been lower for quite some time. Now we're starting to see a change here, and that's where this is always an early warning signal when we look at our technical rating. We also just today got another pivot low, and we've had a few of these recently, but we have a pivot low and we have a sub going on with our power level. A sub for submarine, meaning that the market is attempting to bottom out. Let's take a look at the market itself and really get an idea as to what's going on here. This is obviously S&P, sugar futures. You can see a trend to the downside, a little bit of a bounce. It failed to really hold and then broke back below this threshold and has been in another downtrend for quite some time. We've been taking advantage of this on the short side, but now what we're seeing is bounces to the market, and it's early, but it's worth noting. What we have is a secondary bounce here in the elastic level. It's early warning signal. That's really all that it is, but it's a cautionary note that you should probably start looking at this market. What's interesting here is if we go back in time, you see this bluish cyan colored dot. That's a sub low, and so what ended up happening is that the market generated this, and then it generated a second one. Once we got the secondary signal, the market started putting in a bit of a base, a legitimate base that lasted for quite some time. This would be a tradable range, but not necessarily an investment range. But I think things might be a little bit different because we're at such an extreme, and I'll go into a little more detail. So just recently we had a sub low, another one, and now we just had our second sub low. And so it's a secondary sub low that's telling me that perhaps there's an indication the market is legitimately starting to bottom out here. And if we take a look at a weekly chart, you can see this pronounced huge sell-off, this trend that's been underway for quite some time. And we're at an extreme right now that we're at the lowest lows we've seen for quite some time. So if I take this particular chart and I scrunch it up a little bit and be able to go back in time, you can see that on this continuous contract, so you just have to take this with a grain of salt here, that we had some lows that occurred in this particular case back in 2010 and another one back in 2008, and we're below that threshold right now. So these are ultimate really lows that we're seeing right now, but what we're seeing in the power level as well as some other indicators that the market is beginning to have bottomed out with the indicators. And that's what's giving me hope that this threshold, this sell-off that we're seeing just recently to low lows, that we've seen the crescendo of that. And so there's opportunities because sugars are very good, very volatile, but a very good market. And we could find ourselves in a position that the market could start to, in short order, start to rally. So with that being the case, that's why I want to point this out to my investment friends that there's the potential opportunity. If we flip back to the website, I just want to show seasonal tendencies. Now, it's not accurately following the seasonal tendencies yet, but we're coming to a a low point during the course of the year. This is a 5-year chart, and we'll look at a 10-year as well. But I just want to point out that we're coming to a major point where the market typically, on the 5-year analyses, bases, and there's big opportunity, according to the seasonal chart, for a bit of a bounce. So it's good for the traders as well as the investors, and that's why I'm giving you this information now as far as the investors, because you could start to nibble a little bit and take advantage of this potential little bounce to the market. If we look at the 10-year analyses, you see a different perspective, but what you still see is in the coming weeks, basically in September all the way into mid-October, a nice little bounce to the market. So this is early, as I've been saying, but it is something that you may want to at least start taking a look at and start nibbling on the ETF. And then for the tradable opportunities, well, we're still short the market on the future side, and we've got a nice profit going on. Here's the softs as a whole. We're doing well in cotton, coffee, and doing very well here in sugar. But I think that we're going to start to see that some of the shorts are going to start to unwind. We'll start to get some more long start to position. We'll start hedging ourselves in the coming weeks, and hence the reason that I think that there's opportunity to nibble a little bit in the ETF cane. The other thing that I'll point out is if we take a look at our depth gauge, you can see that the trend obviously in the blue area has been to the downside, and that this trend has really been underway since 2016 for the major thrust. And when we get into these lower levels here, the depth gauge is simply telling us that there's a lot of weight, a lot of water weight above us. That's the way to view this. And with that sub low that occurred in our power level, that there's a good indication that we probably come to the low point here, and we're going to start looking for a base. The other thing that we'll point out here is if we take a look at a rolling CAGR, compounded annual growth rate, and we look at all of the markets that we look at, and we're looking at just the last 12 months, so from yesterday back 1 full year. I just want to point out that there are some markets doing very well in the last 12 months, and look what's happened here. Sugar and coffee and lean hogs, they're at the bottom of this level. 32.6% annual CAGR for the last 12 months. When you're down at the threshold, think of this as a contrarian indicator. Those that are at the top of the list are probably going to start to reverse, and those that are at the bottom of the list are going to start to reverse to the upside. This is just a long-term perspective, and it's just simply a ranking. But sugar has been at this low level, and I think, for the most part, that there's some early warning signals that are out there, and there's some great opportunity that's going to be coming up. And so I'll just pop back to the seasonal chart and take a look at the 5-year chart. That seasonal opportunity is going to be coming up here very shortly, and for an ETF, it's a really good opportunity. For the future side, we're obviously wait for the systems to start to transition from the heavy short position we have right now into a hedge position, into a long position. But with the opportunity that's out there, just beware that from an investment perspective, that with the crescendo effect that's out there, with the power level, the elastic level, the systems beginning to unwind some of the short positions and starting to take some long positions that are actually taking place, and the seasonal tendencies that are coming up from an investment side for the ETF cane, not a bad investment, at least something to take a serious look at. So do so. Take a look at sugar either from the future side and continue to watch the systems. From an investment side, look at the cane ETF and heed the warning. At least focus your attention on that particular market and look for opportunities, and following hopefully the systems or your own analyses that you feel is warranted. So thanks for watching, and we will take a look at another market tomorrow. Bye-bye.